This all good afternoon. This is your host here. This is the Price Action Traders Forum on YouTube and on Telegram. Just want to show you how to filter your trade, how you can check for the high probability of trade of AM using your trading on AMD patterns, how to check for bad trade setup and the high probability trades using your CIC model, divergence setup. So CIC model is simply a divergence setup between two positively correlated instruments. Like here we have the US dollar index as a as an indicator for US dollar Swiss francs here on the left side. So because the two instruments are positively correlated, US dollar index, and then we have US dollar Swiss francs. So you can use this you can use this trade setup to trade even Euro USD because Euro USD and US dollar Swiss franc has a negative correlation. Yeah, you can use it to trade USD Japanese yen, you can use it to trade AUD USD, you can use it to trade. So look at those currencies that has US dollar as the base currency. Look at the current instrument that has US dollar. You can use it to trade. So you can use it to trade many currencies like USD Japanese yen. You can use it to trade USD Canadian dollar. So when you sell, for example, if you buy US dollar, buy USD, so that means you go to be selling. You will be selling Euro USD, USD. So you can use this information to trade different pairs of currency. Once you see the setup, and you get the setup, yeah, you can use it as well. So what is correlation? Cracking correlation is simply a divergence between two currencies that are moving, two pairs that are moving in the same direction. Like for example, if you watch here, from here, we have this downward trend, right? And the same thing with under this US dollar index, we have downward trend. If you watch carefully here, you see it. We have downward trend from here, right? Lower, this is the lower. So we are having lower or low, lower low, lower high, lower low. And the same thing we are having this in here, lower low, lower high, and lower low. So the same, they are moving. They were initially moving in the same direction. They're initially moving in the same direction. Let me bring this one down. It's gonna be okay. So they were initially moving in the same direction. If you watch carefully here, between here and this place, you are initially moving in the same direction. But eventually, they decided to go in opposite direction. There was a crack. There was a crack in their movement. So disagreement between two of them. So whenever there's a disagreement between two, that is when there will be a possible reversal, right? So here we are having a US dollar index trying to come down to this level, to this lower low, then a short rally upward, lower high, then another low, recent low, which is not as low as the previous one. So this is a higher low, right? A higher low. But here at about 14 GMT, this is 12 GMT. So you see the same within the same time zone. So here we have a US dollar Swiss francs moving to a lower low, then a lower high, then a new lower low, right? Which is lower than this, right? So you see that there is a manipulation of this low here. There's a manipulation of this low here. But here, there wasn't a manipulation of this low. This low has not been taken out. Can you see that? This low it has not been reached, has not been breached. Here, it has not been breached, but here it has been breached. You see, so there's more manipulation on USD Swiss francs than we have on US dollar index. Can you see that? So now, what happens is that there's a crack. Where there's a crack, there's a crack because this guy tried to showcase the manipulation that was going on USD Swiss francs. Right? So whenever that happens, we have our trade set up, right? If you remember your this thing. If you take your indicator and the currency pairs, you know, this is, for example, this is your currency, this is your currency pair window, making, the currency was making a lower low, while the indicators will be making a lower high. So in this case, we are not using indicator because of the lagging situation of so many indicators in the market. So we don't use indicators. We look for currency that the instruments that are positively correlated with each other. So we check two of them. So whenever there is a disagreement, that is when we talk about divergence. So this is what is happening there. So we have this as what? We have this as higher low, while this is lower low. So this now becomes a positive divergence or bullish divergence. So there was a crack here. There was a crack here. So while this guy was going down, this guy was moving upward in opposite direction to this lower low. So this is a crack. So anything from here upward will be buy. See, so that is how we got this. We got this guy being tracked by this manipulation. So that's how you can use. That's how you can use your this to trade to checkmate the activities of manipulation here, so that when you are buying, you know directly, okay, there has been a setup. There will be, so it adds more confidence to your trade, more boost to your trade, right? So that is that. And if you go further, if you play this forward, you see what happens after the. So once you enter your DC, you make sure that, okay, your normal setup is maintained. This is the formula for our AMD pattern is maintained, so that you have to be very careful. You enter at the right time. You can imagine what happens here. What happens here? You see that guy moving up, but here What happened there? You see it? You see it? So you can use this. You can see US dollar index was moving upward after this crack. Immediately after the crack, US dollar $1 was moving upward, and the guy tends to move upward. Yeah, you see the formula. So this is your formula is established here. You know, stop hunt, a confirmation. We got a confirmation entry here. Stop hunt. You know, liquidity grab, stop hunt. Then it kind of retrace to this level. So you can be able to get this. But here, this is a risk entry. This is a risk entry. But the stop loss will be below here, so you see two of them. You see two of them moving. Okay. You have to be very careful. When you trade it, just in the advanced class, we tell you what to do and the right time to enter. So you can see there is a movement there. So, and the right time is here. This is reconfirmation here. So that this place got retested. Got here this now. Wow. Stop your long stuff. Yeah. So this is where the crack happened, right? It's where the crack happens. Yeah. So the crack happens and you get your TC here. It's your take profit target. You target the high of this place. Okay. So we play it forward. See it. Your order gets hit. The stop losses, you can just kind of maybe 1 pip below or 5 pip below the this amount.